And Detroit's big three automakers have temporarily closed all U.S. factories as businesses and citizens do their part to control the spread of the COVID-19 pandemic. Now, union leaders and members called for the closures to protect workers. Beyond General Motors, Ford, and Fiat Chrysler's closures, Honda, Toyota, and Nissan said they would also shutter their North American facilities. The move comes as auto sales worldwide have been nearly ground to a halt. Analysts at RBC Capital Markets believe the pandemic could drive global auto production down 16% this year, due in part to an expected 20% decline in sales in 2020. For more on this, let's bring in the car coach, Lauren Fix, who's always going to give us expert analysis on this particular subject and many others, Lauren. I don't want to shortchange you here. Lauren, let's start with the downturn in auto sales. At this time, we have no idea how long this pandemic will last and how long these social distancing controls will go on. How bad is this expected hit for the auto industry?
For the auto industry on a global basis, we're looking at a huge impact with every single manufacturer pretty much shutting down production. We're not just talking about high-end cars, but everyday cars. We've already seen a huge negative downturn when it comes to China. They're off by about 80% so far for the first quarter, but that may change. They're starting to get back online. But here in the U.S., we're looking at last year's sales at 17.1 million cars. ALG is recommending, and they're stating they're somewhere around 14.9 million. We have not seen a downturn like this since 2008. This is going to impact a lot of us because if you look at the Dow Jones, half of it is impacted by the auto industry, either by a supplier or something that supports the auto industry. So this is going to be a huge impact, and it's going to take a long time for us to recover.
And now, Lauren, I don't want to be too doom and gloom here, but we have had guest after guest telling us we are already facing a recession. Maybe even a depression is coming. Will all of these auto manufacturers, the giants, will they make it out of this crisis, or are we going to see consolidation? What is going to happen moving forward?
Well, I think you're going to see some consolidation. It makes sense that companies partner to share technology, to share platforms, to share drivetrains. Everybody makes a 2-liter turbo engine. If more people start sharing that technology, what that's going to do is allow them to make it personalized when it comes to the vehicle and the features themselves. So I think you're going to see a lot of consolidation. I don't think you're going to see anyone going out of business, but the impact of the stocks is going to take a long time to turn around. And
on that note, you know, we've seen the airline industry call for a bailout already just a couple of weeks into, or maybe a couple months into this pandemic. Do you see that call from the auto industry? Have they already started those calls, or are we a little bit early on that one?
Well, I know the auto industry is starting, they want to continue, obviously, selling cars, building cars, making cars, but, you know, I think there's going to be a shift in what their plan was. You know, initially you said, like, GM was going to go all EV. Well, there's been a lot of changes, and that may change because if they're not making money on making electric vehicles, nobody is, of any brand, they're going to start shifting to cars that make money, and that would be pickup trucks, sedans, SUVs. That's where you're going to see a shift. So you might see a redirection from a lot of global companies as far as future planning.
And now there's also some talk about the auto industry wanting to delay the implementation of the USMCA trade deal known as the new NAFTA. Right. Do you know what's going on there?
Yeah, the USMCA is supposed to start on June 1st, but everyone's now off. No one's working, and so this is a problem. So they can't get the regulations in place, so they're asking to push it back, to delay, because that's going to make 75% of cars being built here for North America using North American components, which is good for restarting the industry, but we don't have the regulations in place, so they're asking to push it back just a little bit. It's supposed to go in place June 1st, and that all depends on this pandemic and how long it takes for us to start recovering.
All right, and now I want to talk a little bit of market analysis here. So far this year, the big three stocks are really feeling the pain. Year to date, Ford, GM, and Fiat Chrysler all down more than 50%. Honda and Toyota aren't faring much better, 25 and 15% down respectively. How bad is that market impact for the auto industry as a whole?
Oh, it's huge. I mean, think about when General Motors came out of bankruptcy, and I think they got on the market too early. They were at $38 a share, and they were absolutely flat, $34, $38 a share, just kept kind of floating around there. Now we're looking at closing today's market at $18 a share. That's horrible. And actually, they should be very profitable. It should be helping them, but their stock is way down. I have not seen Ford down at $4 a share since '08, and at that time, even I purchased Ford. I no longer have a stake in that. It's disappointing, but unfortunately, you have to know when to buy and when to sell. I think it will come and turn back around. Oil stocks, any of the supplier stocks, I think you're going to start good time to buy if you've got the cash flow.
Lauren Fix, the car coach, thank you so much for your time today.
Thank you.